Hi, thanks for tuning in. This is the ASX and Sector Weekly Chart Analysis for the week ending 26th of December 2025. First chart is the S&P ASX 200 index. This is the XJO, the parent index of the Australian Stock Exchange. We'll just quickly put in some lines so you can see where we are. This is effectively the highs of the range up here and the lows of the range here. We had a breakdown here and a reversal on these two bars. It's a type 2 reversal where the up bar has the highest volume. This is suggesting the market was expecting to break down and then had to recover and move back into the market. Price has since spent 3 weeks in consolidation mode here and pushed higher this week and up into the previous range. Volume's very low this week. It was only 2.5 days trading, 2 full days on Monday and Tuesday, and a shortened day of trading on the Wednesday on Christmas Eve. That accounts for the very low volume. Prices effectively floated up on a lack of selling pressure and has closed just inside the previous range. This is a good result, really. We'll just see if the market is strong enough to hold on to that position over the next week or so. It does appear, since the market reversed down here, that sentiment has recovered. We had this consolidation here. This is rebuying, and then an up bar in response is showing you that buying support has re-emerged in the market after it appeared price may break down over here. So we'll just keep following that, and it does look like the market has regained some of its previous strength. This is the mid-cap sector. It did not break down in a similar fashion to the parent index. Here's the lows of the range. It did appear the market would break down here, but held on at this point, and the market has since pushed higher, moved into consolidation mode here, and this week prices pushed up to those highs and is ready to push higher in response if market conditions are favourable. Highs of the range really come through here, so there is going to be some resistance at that level, I expect. So when there's a challenge to this level and price is attempting to push higher, these two levels together form a complex high, you might say, the high of this bar and the previous highs here. So the market may just have to negotiate a path through there, either by grinding its way higher over a period like this, or blasting straight up through and then coming back to test it for strength before continuing higher or attempting to. So that's worth watching. Next chart is the small ordinaries. The small ordinaries did start to move lower and recovered in a similar fashion to the parent index. Here's the highs of the range. This was a breakdown line here. The market pushed through it, was unable to recover. Secondary breakdown line, and the market pushed down here before it reversed and recovered 3 weeks of lost ground, pretty much up to this initial breakdown line here. Since then, the market's had 3 weeks of consolidation before pushing higher this week and back above that breakdown line, which is always a sign of underlying strength for the market. I expect the market will just push sideways here for a little bit before making any attempt to challenge the highs of the range. This is the ASX financial sector, the largest sector on the Australian Stock Exchange by quite a margin. Highs of the range through here, lows of the range through there. You can see the market did break down. This is a breakdown line here. It did break down. 3 weeks of consolidation. This bar here really is mostly a test for supply with just a little push higher towards the end of that week. And this week price has floated higher on a lack of selling pressure and closed right at the breakdown line. So there was no attempt to really challenge that level at all. Price just floated up to where the resistance began and closed there for the week. Given any sort of reasonable trading conditions over the next week or two, I expect this market will challenge it. Whether next week price just goes sideways in consolidation mode, it's another shortened week, or whether there is a challenge next week, we'll have to wait and see. This is the ASX metals and mining subsector. After a period of consolidation through here, price has moved higher over the last few weeks. That was the highs of the previous range. There was a push higher over a couple of weeks, test for supply, and this week price has continued higher and challenged the highs of that bar to move higher again. This is only an attempt to push higher at the moment. It did a pretty good job, there's no doubt, but it's done it on low volume and a lack of selling pressure. So we'll just see how that plays out over the next week or so. The market is looking strong, there's no doubt. The ASX gold sector, similar to the metals and mining to a large degree. Price is looking strong, no doubt. We saw a little bit of weakness come in here. That was easily absorbed over 2 weeks through there. Price pushed higher, tested for supply within this bar's range, pushed higher a second time, test for supply, and again there before pushing higher in response. Last week was another test for supply and absorption bar. This week price has pushed higher in response, pretty much confirming the push higher overall. And even though the market did move higher on relatively low volume this week, it's standing up there pretty tall and proud. No test for supply this week. That was a good response to what was a period where the market just spent a lot of time in consolidation mode below this highs of the range level before actually pushing higher. And it did so really nicely with test for supply, push higher later in the week, test for supply, and then a straight push higher last week in the shortened week on low volume. This market's showing quite good strength at the moment, there's no doubt. This is the ASX energy sector. It's kind of travelling sideways at the moment, not showing any great amount of weakness, but not showing much strength either. Highs of the range through here. We had the lows of the range going through there, and price did break down. We saw a shortening of the thrust here, and then a recovery of 5 weeks of weakness all in 1 week. That was your initial sign of strength there. Price pushed up. There was some resistance found there as the market moved up adjacent to this congestion to the left. In response to that, price attempted to consolidate sideways, but it did break down here. It's only been a modest recovery this week. So we're getting some mixed signals here. It doesn't look particularly weak, but it's not looking as strong as it did. So we'll just wait and see how this plays out over a little bit. This week's recovery was modest at best. It was a fairly weak recovery, but that may not be confirmed as yet because it was a shortened trading week with only 2.5 days trading. So we'll just have to take that with a grain of salt and watch the response. This level at 8,000 here appears quite important at the moment. We'll just see how the market negotiates its way through this little zone here. Because that's the important bit at the moment. We'll just see how that plays out. This is the healthcare market. It's also looking quite vulnerable at the moment. We were looking at a secondary attempt to consolidate through here, confirmed by this bar, and these 2 bars previous within that bar's range suggested the market was still absorbing. Last week, price broke below this important level, the lows of this bar, I initially thought it might be a reversal, a 2-bar shakeout or something like that, and it may work out to be that in the end, we'll see. But this week, it was actually a fairly weak bar. It was inside the previous bar's range. The closes were adjacent to each other, but you would have expected something more like this week if the market was really strong, and it didn't do that. It was a bit disappointing, really. So we'll just see how that plays out. The market is threatening to break down again because it's broken down a couple of times here. We saw an attempt to support the market through here, a weak recovery, and price broke down here, and it's threatening to do so again. So you need to take this with a grain of salt. This is why we don't jump in too early on these attempts to accumulate. There's a serious risk associated with buying too early in what appears to be an accumulation. You're better off waiting for the accumulation to take place, let the pros do the work, and then jumping in on the breakout. So we'll just wait and see how this plays out over a little bit. But at this point, the market's looking vulnerable, there's no doubt. This is the ASX industrial sector. It was travelling so well previously before some weakness emerged over here. And since then, the market hasn't traded in a similar fashion at all. Highs of the range through here, lows of the range through there. There is more weakness than strength at the moment, but the market's attempting to hold on. The weakness hasn't been strong enough to force a true breakdown yet. A couple of times it's looked pretty vulnerable through here and it's found enough strength to recover, but the recovery's been weak so far. This really should have gone right up to here, the highs of the range, and it fell short by some distance. So it's under pressure. There's an attempt for the market to hold on. It doesn't really want to break down at this point, but it's not got enough strength to push up to the highs of the range, and that leaves it vulnerable to a breakdown. A breakdown through the lows of the range would probably see price down here, or at least to this level. So be careful in this market. It's under a bit of pressure and looking vulnerable. This is the ASX consumer staples sector. It's effectively supermarkets on the Australian Stock Exchange. The market's been attempting to consolidate through here for quite some time. Highs of the range, lows of the range, looking a little vulnerable here. The breakdown line above coming through here. Market pushed up to it a month ago and came back in response. Didn't ever challenge it seriously. This week the market's holding on within the range of the previous bar on the low volume with the shortened trading week this week. It does look more like this market will move sideways in response. There's reasonable strength at this level, and it should be enough for the market to hold on. We'll just watch it carefully for now. It certainly doesn't look particularly strong, but when weakness emerges, the market's been strong enough to absorb that weakness and move sideways in response. And we've moved sideways for quite some time in here. So we'll just see how it plays out. You really want to see the market either break out or break down to get too involved in this market at the moment. This is the ASX consumer discretionary market. And this market's also looked a bit vulnerable more recently. Highs of the range were obviously up here, but all through here, the market was unable to come up and reach the highs of the range. This was a bit of weakness in the market. It wasn't looking good. Anyway, there's the lows of the range. You had a breakdown. The market found it difficult to recover here. Secondary breakdown on this bar. There was some support coming through here, culminating with spreads reducing, and this bar showing you that there was some buying support in the market with quite a narrow spread and an up bar in response. And since then, the market has moved more sideways in here since this up bar This was a weak bar. There was an element of strength in that, where the spread reduced, volume increased here. Similar on this bar, an up bar in response does show you that there is some buying support in the market. It's attempting to hold on through here. You'd want to see some more strength in that market before you dived in. This is the ASX property sector. It closed higher this week. We saw some weakness emerge back here. This bar here was attempting to neutralise that weakness. Highs of the range were really established there. We had the highs of the range here initially, but there was obviously some weakness up here. It just wasn't clear exactly where it was placed. And this bar here effectively shows you where that line of resistance comes through. Here's the lows of that range there. You can see the market did break down, spent 5 weeks in consolidation through here before pushing higher this week and up to that important level. It didn't really issue a serious challenge to it. Similar to the rest of the market on the reduced trading week, the market's just floated up to that level, effectively on a lack of selling pressure. So we'll just see how the market goes. You would expect this market to consolidate for a day or two in response like this before there's any serious attempt to challenge that level. We'll just keep an eye on that and see how it goes. Okay, back to the parent index just quickly, see where we are. In some respects, it might actually be better to look at that market than mid-caps than the parent index. This chart gets knocked around quite a bit by the mega caps on the Australian Stock Exchange. Highs of the range, lows of the range, breakdown, reversal and recovery, period of consolidation. And this week, price has recovered and pushed higher in response and is effectively up at the lows of the previous range at this 87.50 level. So we'll see how the market recovers next week. I expect you'll probably see some consolidation in response before there is any sort of really serious challenge to push higher. That remains to be seen. Okay, thanks for your time. I'm not sure what's happening again next week with holiday trading, but we'll see. I'll attempt to do this again next Saturday. Thank you. See ya.